All right, everyone, welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts and analysis. Anyways, let's get into it here this week. So markets here staging probably really the rally of the year so far. So we started the week off, or rather closed the week right above that 409 handle on the spiders, and we ended at 434.69. So monster move, epic short squeeze, and what we would call a rip your face off rally for sure. I thought we would get down to that 405 handle and then put in a low. Obviously, that was not the case. It was pretty much a gap and go this week. And let me explain. I talked about this last week, but when you get through that 382 retrace and you get more than halfway through it, usually you're going to go and test that 50% fib. So that was kind of my thought there. We'd have one more little dip, and then we would get some type of a move like this. I didn't think it would be a 270 point move on the SPX, but it was nonetheless. Now, what happened this week? Obviously, we had the Fed, and that's going to be talked about a lot. Powell was ever so slightly dovish, and markets just latch onto this stuff. So it does not take much if they think that they're going to be slightly more dovish. The market will take it and run with it. However, there's another thing too, and I think this is more of the real reason that the market rallied. So we had the QRA data come out. I believe it was Tuesday, or I believe it was Wednesday morning. This was before the Fed, and I said that this was very strange. Monday and Tuesday, because if we take a look at the VIX here, so if you're familiar with what event vol is, I'll briefly talk about it, but event vol means like a premium on hedges, premium on volatility, premium on put options ahead of a volatility event, aka the FOMC. Usually you're going to see the volatility index trade up ahead of that. Maybe the markets trade down a little bit as hedges are put on ahead of these events. Monday and Tuesday, the VIX sold off very sharply. Had a nice uptrend going here on the daily, and it sold off ahead of the FOMC, so before the Fed. What did happen Wednesday morning, though, is we got the QRA numbers, and essentially Yellen is issuing more debt at the front end, which means a lot of that liquidity can come out of reverse repo instead of coming out of the market. Markets love that. If you ask me, that was probably leaked to Wall Street over the weekend. If you take a look at what happened Monday, it was gap and go. Tuesday, gap and go. Wednesday, gap and go. So the market was not waiting for the Fed here. And the market likes that liquidity, and it's really that simple. So the Fed being, ever so slightly more dovish was just kind of fuel to the fire that had already been started over the weekend. But nonetheless, big move up here for the markets. There is a lot of resistance up here around 438, 440. You've got the 100 period moving average pivot high, and then that breakdown bar. But we've had a very nice run. I do expect us to trade up into that this week at some point, and then we'll probably get some type of a pullback here. But bottom line, it does look like the markets have put in some type of significant low here for at least the medium term. So markets acting well this week. A couple other things before we get into the Qs. So if we take a look here, now central banks, not the U.S. obviously, but central banks are now cutting rates at the fastest pace since August of 2020. Last week we talked about credit spreads, and they did not widen. So markets obviously liking that as well. But the next kind of thing that's coming up here is, all right, so bonds finally getting a rally, which we'll talk about those in a second. Bonds finally getting a rally. Are they rallying for the wrong reasons? Take a look here. Yield curve. Arrows show where the curve uninverted by 100 basis points steepening of the 3-month 10-year curve spread. And you can see they graded the shaded gray area is these are all recessions, right? And we might say, well, the long end is coming up faster than the short end. And recently, yes, but if we take a look here, on Friday, the 2-year and the 5-year, I'll draw this in for you. The 2-year and the 5-year broke these uptrend lines. So previously, over the last couple of weeks, yes, the long end has been coming up faster than the short end, but now the short end is coming up faster. So market here, is the market sniffing out recession? That's my takeaway from this. Stan Druckenmiller certainly says so. He thinks we're heading for a hard landing. So just a little bit of macro stuff there for you. But right now, But right now, as far as the charts are concerned, again, I think we get up into this 439, 440 area, possibly even sometime next week. And we see a pullback, and then we'll kind of go from there. But markets here, big short squeeze really was the rally of the year. You see the triple Qs here. Again, another reason why I thought we would get down to that 405 area on the spiders is if we take this, and I showed you this last week, that 382 and the 200 moving average are so close, right? Just one more little dip into that would have made a lot of sense to me. But sometimes, you get a lot of people looking at these levels and they just don't quite hit them. And I think that's just what happened there. Again, I think, honestly, to me, I think a lot of that stuff was leaked to Wall Street over the weekend anyway, which explains that gap there. But you see the triple Qs going back into this trend line. Last time we got a pretty good pullback off of that. So we'll see if we can get a rollover. There is still some support, obviously, at this gap here, 357. And then, of course, that 355, which was your previous pivot low. So Qs here also having a nice rally. Apple did report. Market didn't like it too much, but it wasn't that big of a deal. It did come off the lows on Friday. Again, with all the, the Fed, data and stuff like that, it's not like Apple having a worse than expected quarter is going to really hurt things. You see the Russell 2000 getting a big bid here. Again, big short squeeze. So heavily shorted sector, obviously rates on the long end coming up hurts small caps, and so the most shorted sector is going to get the biggest bid. Look, I mean, these are ridiculous gaps here, by the way. But IWM, you got the 50 MA, and look at where it went. We stalled out right there at that trend line, which we broke down from. So again, I'd expect some type of pullback here, maybe a little bit more upside into the 50 MA, but it's got some backing and filling to do, but big move there for the Russell 2000. Dow here also making a daily higher high, so that's the only index that's done that so far. So you see there's that pivot from the 17th, and that's the only index that's made a slight higher high. Again, I'll give it the upside bias to 343, maybe 344.50, there on the DIA. Again, does need to pull back, very extended here in the short term, but big move there. For the markets, semiconductors up 2.33 on Friday. It's very obvious where your resistance is, right? So this down sloping trend line, again, it coincides with the same level there on the Qs. So semiconductors, so we'll say, 152 right in that area. There is some, we did go into that 100-day moving average, so it might need to stall out there as well. If it pulls back, you've got the big gap there, and then really, nothing to say it can't test the 200 there as well, but big move there. For the semis, just like everything else, IGV up 1% on Friday. Again, down sloping trend line right there, coincides with the same level on the semis. If you get through that, you've got this one here right around that 359, 360 handle. Dow Transport's finally getting out of their own way. And again, up 1.6 on Friday. Big move here. I talked about 13.5 being support. Take a look here. 200-week moving average. All these pivots down there, and we had a big outside move up this week. So transports needed to get going here. Short term, got a little bit of a pivot there, but I think it can get up to 14.8, 14.9. You see those moving averages down sloping. That'll be kind of your next big area. May have to pull back into this trend line and confirm a higher low first, but big move there for the DJT and a big move for the market. We talked a little bit about bonds, but so 2-year here, or that's the 5. 2-year, again, breaking this up sloping trend line. I think go down and test that 200 moving average. Is also a bit of a pivot right here at 463, 460 to 463. So that could be kind of your local target. Yeah, even we could even draw this in right here. There you go. So 463 to 460 on the 2-year could be your short-term target there. 5-year, there's a lot of support at 440 right now. If you go lower, we'll probably look at around honestly around 4% there for the 5. For 10s, 4.33. I've been looking for that actually for a while. If we get through that, 4.05, and then the 30-year pulling back, although holding up, I'm still looking for it to go to 440. There's a lot of people trying to buy bonds right now. There's also a lot of shorts in bonds. I want to be clear. I think there's going to be a rally in bonds, so meaning yields will come down. But I'm not looking for, a lot of people are calling for 1%. I am not in that camp. There's too many inflationary pressures going on moving forward. The Fed is even treating the government like like it's a child, because that's how they are acting. And the U.S. government's not going to stop spending. I could go on for hours about this, but I do think bonds get a rally. If those of you who follow the TLT, that area, was it 4.35? That should coincide with a 92 handle there on the TLT. So that's where I'd be looking for it to go. It did back off the 50 MA, but there's plenty of room for a higher low now. We now have daily chart higher highs and higher lows. So bonds getting a little bit of a counter trend bid here. We'll look for some more upside, and then we'll kind of go from there. All right, housing XHB also getting a big bid. Look where it went. I believe I told you guys 76 and then 78 last week. And that's where it went. So there's your upsloping trend line. We've had that for a long time on here. And we went in there, made slight higher highs, stalled out at 78 and pulled back. On Friday, again, we'll look at 74 here in the short term for a pullback. If we get through these levels and it's back up to that $80, well, we'll say 81, all right, on the XHB there, with a pivot, and then you've got this old point of control. We gotta look at a weekly here, going all the way back to that pivot there. So that would be your level there on the XHB. VNQ finally getting a bid. And again, look at where it went. So this is why charts are so great. Yellow trend line, pivot low, breakdown, and we're back testing that low now. So short term probably needs to stall out and do some backing and filling. You've got a gap there. You've got a gap here. You've got the previous double bottom at 74.66. If this trades up, we'll look at about 80 to 80.50 there. That was your last breakdown. So VNQ finally getting an outside bid. What I don't like about this is last week, and I told you guys, you close below the 200-month moving average is not a sign of strength. I mean, yes, we're bouncing this week, but it could just be a bounce. So just be aware of that. If it was going to get defended, it should have gotten done last week. But either way, it's getting a bid here, and we'll respect this for right now. XLF went to 34. We talked about that. Slight higher high there. Big up move. And again, this is liking, these banks are liking the normalization of the yield curve, at least for right now. Again, so remember those two charts I showed you earlier about the uninversion and about banks cutting rates. Right now, I think we're in a race. It's like we're in a race here to find out when does the market start caring about bad news becoming bad news. So that's going to be the thing moving forward. But right now, banks getting a bid here. XLF up 1.3. And going into this trend line here, I'll say a pullback could take you to 32.50 in the near term, and we'll just leave it at that for now. But banks holding up. KRE finally getting above that 40 handle. That needed to get back above there. And again, look at, in 2 days you wiped out like 2 months worth of trading here. 1, 2. So again, those I talked to you guys about those yield spreads, those credit spreads, and those coming in pretty sharply was very bullish for the market here and bullish for banks. There's the KBE back above 38. So we got to respect the market here, respect the strength in the near term. Broker dealers here right into the 50 moving average. Again, if you can get through 490, you can go back to 5. Pullback should take you down to 460. All right, over to commodities here. So crude, as always. So we did break this little trend line here on crude this week. If we head lower, it's probably down to about 77. If that breaks, it's a 74 to 75. I like that area a lot on crude. And we'll see what we get here. There's lots, I don't need to tell you guys the fundamental backdrop for energy, but that doesn't mean things can't pull back in the near term. And again, there's also this trend line in the 200 moving average. So a lot of support around 77. If it gets through that, though, 74 to 75 is where I'm looking for. XLE. Good outside move Thursday, came back in on Friday. So again, the energy prices kind of holding XLE down, even though the rest of the market was rallying. In the near term, all I can say is if this breaks through this area here, it's going to 82. That's really all I can say. This pattern is too sloppy for me to really do anything with. If you get above 92, especially on a weekly close, you get above these pivots and this pivot on a weekly close, then it can go to new highs. But until then, it's just in too tight of a range, too wide of a range rather, for me to be interested in. XOP is a little bit better. You got to get above these pivots on a weekly close to break out, and then short term, 139.45 is your gap fill there, and then obviously that pivot. If that goes, then you can go back down to 130. OIH holding up really well. So take a look at the weekly. I like that we filled the gap on the weekly, and we're back above the moving averages. So oil services seem to be in much better shape here. And on a monthly, you can make a case you just have a monthly inside bar. In fact, you do. So that actually looks pretty good. A little bit more consolidation. This can go higher. So oil services in better shape. I know the XLE is held down right now because of those deals from Chevron and Exxon. Market not liking that, never does with that M&A stuff. But that's just the case right now. Uranium, what can you say? CCJ here. So this is interesting. We tried to break out this week and we didn't close above this pivot. We did make new highs, but we did not close above that pivot at 42.17. So no breakout on the weekly, but it is a good outside move. I will say if it gets through that, then the next real level is 45. That's really all I can give you here. I'm going to say the same thing I've been saying. If you own it, that's fine. Trail your stop. If you don't own it, don't chase it. So that's really that simple. But CCJ continues to be very strong. The URNM continuing to be very strong. There's a monthly look. Weekly looks fine. Again, I just want this moving average to catch up. The 20 and the 50, they start to catch up. This can curl up and make new highs. It's really that simple. So uranium holding up very well. Nat gas also having a decent week. Nice outside move on Tuesday. And on the weekly here, 1-2 pullback, pop. It's looking for a move into that $4 handle. So Natty holding up very well. DBC, a lot more of the same, just consolidation there. DBA attempting to make new highs. So that looks like a nice pattern there in ag. Looking pretty strong here. Dollar index. So interesting development on the dollar on Friday, really. So all week long, it was continuing to hold this kind of consolidation pattern, right? So on the weekly time frame, you could see here, nice tight bull flag. On Friday, that did break down, and we actually closed below this green bar low here at 105.51. So here's our low, 105.06, and we did close below that. So the dollar here may be in breakdown mode. So next level we're going to look for, there'll be minor level around 104.50. 104 is your bigger level, and then through that, we're right around 103.50. So kind of 50-cent increments right now, but dollar coming in, and again, markets like that when the dollar breaks down, obviously. So we had a nice consolidation pattern, and on Friday that did break down. So we're looking for the dollar to go lower here. Over to gold. Gold continuing to hold up. It wasn't really. It hasn't been too responsive to the DXY lately. Now, with rates coming down, gold probably likes that. Dollar coming down, gold probably likes that as well. And it's holding up because of a fear trade too, but it did not break out this week. So that's a little interesting to see with the dollar down as much as it was, gold not really responding. But it has had a big run lately, so you could just say a lot of it's been priced in. Maybe just a little tired here in the short term. I've told you guys it needs to consolidate more. And if it does that, again, 2050 is your next level. And if you get through that, then there's your high. That's really that simple on the gold chart there. If it does pull back, there's this previous trend line which we broke out of. That's never been tested. And then you could go down to 1900 if we continue to pull back. But the gold price holding up really well. Silver also had a decent bid on Friday. Again, you guys, same thing, has been the same thing for the last 3 weeks. Up move, sideways consolidation. It's looking to go higher. So I don't really see anything wrong with the silver chart. Platinum also with a nice outside move. That still has resistance at, I'm going to upgrade it to 975 now, just because we're starting to consolidate here. If it does break down, then it can go back down to this double bottom, but it's holding up right now and doing some consolidation. Palladium, no problems there. I'm still looking for that one to head lower. Copper with kind of a sideways week here, but still stuck below this resistance. If it heads lower, you guys know I'm looking for it to go to 340. Bitcoin, lastly, continuing to hold up here, stuck at that 35 handle. I don't see any real problems here. There is still just a lot of resistance at 35, and it's still very overbought. So I would prefer a pullback here before doing anything with it. But again, Bitcoin hanging in there okay, and a lot of the alts starting to shape up a little bit better. You see ETH there, still a lot of res there on ETH. Doge with a decent pattern there to go higher. Polkadot, I think, so, yeah, Solana had a big run this week. Again, a lot of resistance in this area, but big outside move. Cardano as well. So the alt's finally starting to get some traction there, which is a good sign for the sector. But again, still way too overbought for me to do anything with them right now. Again, lastly, over to the spiders here. So again, I do think we get up into that 439, 440 area, possibly even this week. Doesn't mean it'll gap and go Monday. We might have to, chop around a little bit. But right now, I can't chase the market here higher. If you're looking for a dip to buy, wait for the dip to actually come. Don't chase it after a 280 something point move in 5 days. There will always be a pullback here. There's going to have to be profits taken. There is resistance here with this breakdown bar and that pivot. So let it get up in there. And then if you're looking for a dip to buy, wait for it to dip. Don't chase it at this area. I do think, though, the market has put in some type of a pivot here, possibly even into the end of the year. But right now, big theme that I'm looking at moving forward is we're now into the race against the time where bad news is bad news, or bad news is good news, I should say. Bad news is still good news now, but how long until we get to the bad news is bad news part? Anyways, we'll wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. I'll talk to you guys all next week.